Hey, sup traders, investors, how y'all doing? Welcome to Much Love Chapter. We're back with our weekly market update. I do this on the weekend when things aren't moving too much. We're gonna look at the markets and we're gonna talk about it through the trading system that I like to trade, which is we call it MTP Market Timing Pro. It's a simple trend following system that can be done if you're really busy and don't want to spend a lot of time trading. So, as far as Bitcoin goes, it's not in the market. It's mostly, actually, let's set this up here so we have our exit. It's been mostly out of the market since January 19, as you know. One of the really important filters here is this 200 moving average. We do not take trades on any asset under the 200 moving average. And the reason is, while price can just rally back, any kind of sustained bear market will happen under the 200 moving average, as we saw in 2022, as we saw in 2018. And if we look at the other assets, we look at NASDAQ, S&P 500, etc. That's just math and logic. However, what's really important is asset selection. We're here trading the best and strongest assets. They might not be the best and strongest forever. The US might lose supremacy and dominance and fade to zero. In the case that happens, the 200 moving average filter is going to help take us out. Also, if you're trading a subpar asset, you're trading meme coins, you're trading penny stocks, you have a random stock that's your favorite, you should go ahead and look at that 200 moving average because I promise you, simply not trading under it is going to help you out. Okay, in the long run. So we have Bitcoin, which the question is there anything to do? And there is no. We're under the 200 moving average, closing. Any kind of breakout dip buy trades, it's out of it. And there's really not a, I guess that was almost a signal, but not quite. Yeah, there's just not so much to do. Not to say that price can't rally, but simply trading this system, there's nothing to do. Let's look at the stock market. A lot of people are freaking out over the NASDAQ. And our system has been out of the market since mid-February and closed the rest of the positions at the start of March. And again, look, we're under this 200 moving average. Why trade? There's just no reason to. You can do other things with your money. We might just bounce over it, but we haven't. And it's possible we have a longer bear market. And you could say 2022 is an aberration. No, if you study history, by the way, there's a really good book called Devil Takes the Hindmost, which covers historical booms and busts. And if you study it, what you learn is that these booms and busts throughout history, they always happen. And the key to trading them, if you want to make money on them, yes, you can hold through them, but if you get in the wrong time, you might be underwater for years. It requires a lot of patience. If you can keep dollar cost averaging, yeah, eventually it comes around. Sometimes these assets do not recover though, and I don't want to bet that, like, I want to be prepared in case of the worst case. So for me, that means getting out of the market when it's calling for it, and we can get back in and trade it with leverage on the bull market and then have zero exposure in the bear market. So let's look at US 500, which is a similar scenario. It actually looks like it took a single buy here, but considering it's not really very long, considering here it was in 10 positions and now it's in one, it's 90% flat. So same thing, we see prices under this 200 moving average. I know there's not a lot to report, but there's a couple interesting things we can get into. And just because price closes above the moving average also won't be enough to take on a full position. That's a filter, it's not a rule for everything. So As a rule, we will not take trades under this moving average of price take longs. Some of y'all, by the way, are like, why don't you just go short? Well, it's not as simple as just flipping short and trading short. It doesn't work like that. Let's go to gold. Gold is the only one that our system is still trading and holding, and it's closed most of them, but it's holding some positions all the way back from October 2023, which is crazy. By the way, if you didn't figure out, the blues are the buys and the purples are the sells, and the orange is the stop loss, the gray is the average entry. I did have someone say in the comments that gold never goes through drawdowns. Like the biggest drawdown gold ever had was like 14% or something. But yo, what are you on, man? That's just factually incorrect. We see from 2011 to 2015, gold had a 45% drawdown, and it took from 2011 to 2020, it took 9 years for it to get back to break even if you bought there. At the same time, we can go back and look at even some more extreme drawdowns that happened from the high of the 1980 bubble, where from the high of 1980, we actually drew down over 70%, and it took from 1980 all the way until 2008. So it took 28 years if you bought here to get back to break even. So to me, first of all, the person who's saying like gold has only had a 14% drawdown, what are you talking about? What are you talking about? This happens even to the best assets. And one of the ways to avoid it is that 200 moving average filter. That said, gold is over it right now. And we can talk about why if we look at the 80s. It spent a lot of time under it, did recover it, and had a couple rallies. But right now, gold is still in a bull run. And if you were trading the system, you would be long from this breakout. I'm going to turn off the top coloring on this one. So depending on how you traded it, what's going on? You're just sitting in these positions. There's been no reason to close just yet. Gold has been an absolute monster. Now, a couple other things we can look at. We're seeing overperformance from some international stock markets. Not so much, but more so, like the Hang Seng, which is a Chinese stock market, hasn't been stopped out of its positions. And we also look at EU50, is a little bit stronger. And part of the reason why is because of perceived risk in the United States. So we can start to look at other assets, but to me, I'm looking at the global liquidity cycle and saying everything's correlated. So if I personally like, I'm not looking for a better stock market to invest in. I'm just waiting till they all look pretty good. Because even if there's rotation, I don't know that it's sustainable because the way the other stock markets just don't behave the way the US one does because people don't invest in them in the same way. So there's not like the constant retirement fund buying. Anyways, if you want to trade the system with us, go check it out. There's a link down below. Otherwise, enjoy doing nothing. Much love. Peace.